Monday, and welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys are having a great day and had a phenomenal weekend. We're going to take a look at our markets from an educational perspective, looking for breakouts and reversals, trying to find out what makes this market tick. So let's go ahead and dive right in, as we are this morning up about 19 in the S&P and up about 74 in the NASDAQ. So last night, when looking at the live trade room, we were actually down a little bit. And so we were looking for areas where we may have seen potential turning points, but we rallied up pretty much the whole Globex session as we kind of made a nice move a bit higher as we started the session with a little bit of a move down, and then it's rallied up pretty much ever since about 8 p.m. Central Time. Overnight. And so we had a pretty good area of demand right here, but really nothing that came to fruition from an entry standpoint. Now, our 4-hour chart is giving us an uptrend, but our daily and weekly chart has not changed directions as of yet. And so what that really means is that from a swing trader or position trader perspective, we are in a corrective move up, which would then lead to an impulsive move down, right? But from a day trader perspective, we are looking for impulsive moves up and corrective moves down to re-engage that trend. And so the corrective move down right now that is most likely to give you an entry would be this little area here on a 15-minute chart. Right? So that would be kind of the area that makes the most sense. Now, you could theoretically also see some basing right here for a potential breakout this morning above 39.47. So those would be the areas I'm looking at for today. In the NASDAQ, we actually had a better chance of getting into a decent little area of demand. We just didn't quite make it into that level right there at about 12,000. So I had an alert set up, and my alert never triggered. Darn it. We did get a little breakout above the high and then a retest. And so kind of the next area worth paying any attention to in the NASDAQ would be this area right here, where we have this big green candle up as the origin of a move higher. Let me remove this one at this point, and also this one. Now, from a 4-hour perspective, we are in an uptrend, but we are coming to a little 4-hour area of supply that we do need to pay attention to. Now, this was right at when the contract shifted. Basing in front of the level means that this level probably is not going to hold. But that area is important because it would take us to a higher high on the daily chart, which we have not gotten at any time soon. We've not gotten a daily swing high, a daily higher swing high since the beginning of March. Beginning of March, we got a daily higher swing high, and then it was just unable to hold as we fell all through April and May. And so I'm, not changing my bigger picture tune until I would get above 13,000. But there is some supply above me. We're basing in front of this level here, which makes it less probable for a successful entry. But this level up here is significantly better. So you do have the two levels that are worth paying attention to that we're coming into. I don't know that I would short them. And if you do decide to short them as a day trader, they have to be confirmation entries anyhow. Okay, so let me swip these over to confirmation entries. Looking at the Russell's coming close to an hourly supply level, also has to be a confirmation entry because we are in the context of an uptrend on the 4-hour chart, right? The 4-hour chart tells me that I'm in the context of an upward trend, and that upward trend is going to continue until we start to put a lower swing low and a lower swing high. And that's really how you change bigger picture trends, right? This is still a corrective move up on the daily chart, but it's an impulsive move up on the day trader 1 hour and 4 hour charts. And so we want to trade the impulsive moves and then get re-engage those impulsive moves on corrective moves back. All right. Next, crude oil and gold. Crude oil we're sitting at a level on the 4 hour chart where we're in a downtrend. But these wicks up here are kind of interesting in that we've been hitting this same area a while, and we've got a little supply area up here, but we're basing in front of that supply area, thus making that supply area much weaker for an entry. I am interested in seeing this move up. Be aware that we may get some inventory announcements in crude oil that are going to cause a price fluctuation, and we don't want to take breakout trades on the inventory announcements. We want to take them after so that we can see what levels are created. But this actually is a really nice potential breakout, especially since we're basing in front of that level. That'll make me remove those candles. And that wasn't a great time of day that level was formed anyhow. But basing in front of it tells me that the better probability is that we break out to the upside on crude oil. But there's no saying which way we're going to go because our big picture trend is down. I would say that though it looks like we're putting in a bit of a base. So if you wanted to grab a few quick dollars today, maybe take a long above this breakout area with a fairly tight stop, and allow that thing to run up just a little bit today. Insofar as gold, we looked at gold yesterday because gold's been really range bound for a while. There is an iron condor available in gold for those of you that trade that particular style. There's an iron condor available in gold. It's paying about a $1 credit on a $5 spread. So the 1790 by 1785 and then the 1870 by 1875. And that has an expiration coming up in just a couple of days. So those are the very, very short expirations. And it's 1870 by 1790. So it's a very, very wide area relative to the prior levels that we've looked at with a very short amount of time to expiration. So for those of you that trade that style, I think that actually may be about the best trade that is available in gold. Looking over at copper, I looked at copper last night as a potential entry, and we've got a little supply level up here. If you take that one, your stop has to be up above here in the red. But that copper area is a lot less likely now as we are basing sideways. Sideways basing before a level is the kiss of death on a reversal trade. So a little bit less probability on that trade now. And nat gas sitting above a potential breakdown, we would just need basing inside of this level. So we do have, some things that are worth watching today. Looking at our currency markets, we had a breakdown overnight in bonds. So we did look for this level last night in the bond market, got quality basing. We did get the breakdown. And so for those of you that took that trade, that is starting to move your direction. I would take your stop and move it to break even. It's been 6 candles and it's not really made a big move. So take your stop, move it to break even, lock in a little bit of security. You've not locked in any profit yet, but move your stop to break even. That way you don't have to worry about it the rest of the day. And then this would be the eventual target somewhere down in this region. And then when it comes to the euro and the Canadian dollar, there wasn't a whole lot worth looking at. Same thing with any of our currencies, really. The one that I found most interesting was this New Zealand dollar setup, as we are in a bit of a symmetrical triangle pattern with these swing highs and swing lows causing a potential breakout. Now, remember, on these symmetrical triangle patterns, it's typically a measured move from the second touch. So touch 1, 2, 3, 4, 5. You've got to go, opposite sides, if you will. And so you measure from the second touch directly to the opposing line. And that is typically the measured move that you can expect on some sort of a breakout. Okay. Now, the thing that I look for is would that measured move also line up to a quality area of supply or demand? In this case, you've got a level right here. You've got a couple of areas here that may act as stalling points, but you do have a decent level right there. And then I have nothing really I can look at from an intraday basis on the New Zealand dollar below because I just don't have anything to look into. I've got to go back significantly longer to find where is the next support area on this chart. And really, it comes into, oh, actually, the daily chart tells me it's this level right here, so pretty darn close. So either way, it does give you a setup. Now we're just waiting for the break, right? You don't really have a break one way or the other at the moment. So that's all I have for today, everybody. If you guys have any questions, please send us an email, support@tradersarmy.com. I appreciate you watching. Until next time, I'll talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.